think another thing to notice is what happens to silver and sometimes other plays before this. Let's go back and compare some charts. So this obviously is the 2007, 2005, 2006, 7 rally. The yellow line is gold. Stock market hit all-time highs. You can see the stock market eventually started to break down. It sold off 20% and then it sold off 50+%. And I kind of believe we are potentially, somewhere right in here. Gold and silver still may have one more big push. That blow off phase we're talking about, stocks might start to struggle more. And if we were to look at what other metals do in this phase, you can see 36, 48, 58, 52, roughly from these little launch pads and then expansion to the upside. If you look at where we are right now, we had these pauses, these little pauses here, and we've already had 70, 140, 50 huge pops, right? So we are already kind of where we are in the past. I believe we're on borrowed time. If you're in the precious metal space right now, the equities market is pushing up here. Looks like the S&P 500 may have hit some all-time highs this morning, which we do remain long the S&P 500. And we're just going to let this market continue to work itself out. Well, the equities markets are definitely showing signs of mixed signals, but the S&P 500 is holding up. If we look where money is flowing today, it is flowing into stocks. The Nasdaq's up 0.8%. The Russell's up 0.5%. We have the dollar relatively flat. We have gold surging 3.7% this morning, ripping through our 151 to 152 target. We have silver up 7%. So we got some pretty big price action going. The real kind of interesting stuff is obviously precious metals. So let's touch on that. Let's go to silver first. So we talked about silver a while ago, saying that if silver broke our 106, we had 106 target on it. If it broke that level, we were going to see it probably pop and go into a euphoric type of phase. Now, a good example of this is the gold chart. Let's just go back to gold. When we had our previous gold trade, we got in right over here on the breakout. We had a 15% move. Fibonacci target put us right at that high. We got out at that high. We just went in for the trade. We're not looking to try and milk it for as much as possible. It's get in, catch the momentum, get out. This is that 60%. You want to catch this middle section. It's not about trying to get in down here around the bottom. It's not about trying to get out at the top, as David Rosenberg and I talked about at the event. It's about catching this middle section. Sometimes you can catch, if you do a trade like this, you can catch just the middle section. A lot of other times we will get in here, ride it up, and then as it rolls over, you get out over here. It all depends on how it goes. Sometimes you get the first half, sometimes you do need to let it peak, and then the strategy kicks you out later. But what happened right over here, if we look, this is what's important to understand, is once we hit this 100% measured move target, we did see a very sharp pullback. There was profit taking, and then suddenly the market just popped and it shot higher and everybody wanted back in. And that's that emotional euphoric phase, a short-term one. And then eventually it goes and it has a big correction, and it took several months. And then it broke out, and of course we've played it again, and we locked in profits on this next breakout and run. So what happened, the key here is what happens after you hit this Fibonacci measured move is you go into a parabolic move. And it's an emotional move. It's just, now it's kind of off the charts. You can't really chart something that breaks through its upper resistance band. So silver broke that level on, I think it was Sunday. On Sunday, it broke that level. And then we saw it just go pop, and it ran all the way up almost to 120, and just huge volatility. Look at the volume. Lots of people piling in the last couple sessions in silver. And let's just check out SLV silver ETF volume. Look at the volume, some huge money, big volatility. That's what happens after we hit a target. Just people go emotional, kind of crazy, and they all jump in, they pile in, and it creates that big pop. Now it's still in an uptrend. You can see we're running up this 5-day moving average. This thing could still keep popping. We talked about this last week. Silver, if it breaks 106, I wouldn't be surprised if it spikes to 120, 130, 140. We talked about it hit 120 pretty much, and now it is. We just got to see where this bubble. We're in unknown territory, so now we can just zoom in. Watch the intraday charts, watch the volume. You can see there is quite a bit of volume here. Some pretty big selling going on, definitely some waves of profit taking. And we'll just have to be aware and be happy at some point to scale out. If you're like me and you do want to start locking in profits and you're happy with what you have with any physical positions you have, or silver ETFs or miners, whatever, at some point you do have to lock in profits if you want to keep them, because I do think we're going to see a 40 to 60% haircut in silver. So if we do go back and look at the silver chart and we go to the monthly, this is what we need to be aware of. Obviously the monthly chart, I've showed this before, what goes straight up can come straight back down. We are spiking up past this level, and now the big question is, where is that Fibonacci retracement? There's a few levels you could draw it, but if we were to go up here, we could see it potentially pull back into the 70s. Between the 50 and 60, this would be the next critical support level. So obviously that is a pretty far haircut from where it is. That's anywhere from a 34% pullback all the way down to about a 40% pullback, and that is if it stays bullish and doesn't fizzle right out and want to pull back even further. The last time we got into a similar scenario in terms of price action, we saw silver have very big pullbacks. Obviously, it took a long time to play out. We look at some other ones here. These are very big pullbacks. These require like 400 to 600% return to get back to break even. And just because a lot of people waited a decade and finally in like a 3-month window it makes a move, just because it's a quick move doesn't mean it's going to last several years because you held on for it several years. It's kind of a pop. It happens very quickly. A lot of people think it's just getting started. I think it's actually just getting close to an end here. But we don't know where the peak is. And obviously as the peak, if we were to look at the Fibonacci retracement, if it was to surge all the way up to say 140, obviously the pullback level also moves up. So it brings it up into the 80s and the 90s. So that's what we just need to be aware of. Again, I'm not in love with precious metals. Well, I do love them, but I'm not going to hold on to them and give back those gains and then potentially wait. If this was to, however it wants to pull back, it could take a year or two. It could take even longer than that. Look how many years it's taken in the past. It could take a decade. And I want my money working somewhere else, not just giving back returns and then just hoping. The hope strategy, this is called hope right here. This is called waste of time. And it's better to jump on, catch the move, or at least pick it up when it starts a new super cycle, which was in 2019, which is when it kicked into a new super cycle, both gold and silver. And you kind of more so catch the upward swing, but you don't have to ride the downward and the flat zone, the stage 1 base you can avoid. So let's actually go back and take a look at gold. Gold has blown through our $51, $5,200 target today. So now it is in nosebleed territory. It could, who knows where this top could be. It could be 5,600. It could be 6,000. We really are seeing it unwind. I think another thing to notice is what happens to silver and sometimes other plays before this. Let's go back and compare some charts. So this obviously is the 2007, 2005, 2006, 7 rally. The yellow line is gold. The stock market hit all-time highs. You can see the stock market eventually started to break down. It sold off 20% and then it sold off 50+%. And I kind of believe we are potentially, somewhere right in here. Gold and silver still may have one more big push. That blow-off phase we're talking about, stocks might start to struggle more. And if we were to look at what other metals do in this phase, you can see 36, 48, 58, 52, roughly from these little launch pads and then expansion to the upside. If you look at where we are right now, we had these pauses, these little pauses here, and we've already had 70, 140, 50 huge pops, right? So we are already kind of where we are in the past. I believe we're on borrowed time. If you're in the precious metal space right now, we've got great gains. It's about protecting it. It's about keeping it, not giving it back. And so we're already kind of here. Maybe things still surge and go a whole lot higher. We don't know, but we just need to know that the music, I think, will come to an end at some point, and locking in gains, slowly scaling out, selling off some of the position as it moves up, that's what I like to do. So let's take another look at precious metals here. This is going to, I'm going to go into 2011 to the market peak, but the top chart here is the weekly chart of gold. We had gold traded sideways for a while back in 2007. We eventually saw gold take off and run higher. We saw silver take off higher, and that was a warning that something bad was about to happen in the economy. And then, of course, we saw a 34% pullback in gold. We saw a 60% pullback in the silver price. We saw a 55+% pullback in the S&P 500. So these were the warning signs where they went ballistic and were telling us something bad was going to happen. Now let's fast forward to 2011. If you notice here in 2011, let's just draw a line here. Silver had a huge run up. Silver is a smaller market. People usually go there for leverage. They want to go there bigger returns. It got caught up and ran higher and went parabolic sooner. If you notice, gold ended up putting in a peak over here, September 2011 versus silver in April. There is many months silver topped out way before gold did. And then from there, we ended up seeing some pretty big pullbacks in the metals, right? We saw gold pull back roughly 45%. We saw silver pull back somewhere around here, around 71%. But the key here that I'm going, everybody's talking about silver. At the event, everybody was talking about how much money they're up and they're making and how excited they are. And a lot of people saying how it's just getting started. We got $200 targets for silver and $10,000 for gold and stuff. But everybody's piling into silver. And what's important is silver could top out before gold, meaning I might actually start trimming off some of my silver first, or maybe a majority, like more silver than gold when I start to liquidate, because I think silver could peak out first. And that's just something that we need to be aware of. So when we take a look at the weekly chart of gold, you can see our Fibonacci targets here. We had this launch pad, we had the pullback, we got the 618, and now we've hit that 100% measured move. So we are now in no man's land, and until it has some pullback and builds potentially a bull flag, we can't project where the next move is going to go. Although I do feel like this is more so going to have a strong rally and probably a very strong pullback, and then I think damage is going to be done. So that's what we just need to be aware of and follow along, right? That's where we're at. Now, if we take a look over at crude oil, we do have oil finding a little bit of a bid. Obviously, lots of uncertainty. The long-term picture of oil has been to the downside. It's getting a little bit of a bid and moving higher. If we take a look, actually, let's go take a look at platinum and palladium real quick. I'm going to go back to the daily chart. My voice, I've still lost my voice from all the talking over the last 2 days. But platinum had a nice big pop and breakout. It's pulling back. It's having a little bit of a consolidation, still holding in an uptrend. And again, it still has a target quite a bit higher, as we talked about last week. And if we look at palladium, actually played catch up. It did have a pop and a breakout, very volatile. I'm not, as I've mentioned before, not a fan of the the palladium chart. It's just a lot of damage was done on this one. And when you pull back that far, so if we go to this low with a Fibonacci retracement, the farther you pull back on something, pulling back to the 618 or lower, which it did, means that the upward Fibonacci extension puts you at a double top. And so we did see it push up here, and then it just got slammed and rejected. That's exactly what I don't like. When something pulls back to the 618 or lower, this is what can happen quite often. You'll move up, you'll have some fake out or shake out, and then boom, it hits resistance, and it might continue to trade sideways for a while. It could also break down. Overall, just not a fan of something that pulls back this hard versus platinum, which actually held up much nicer. It didn't pull way down to the 618. It ended up only pulling back to the sweet spot, and it's holding up and pulled back above support and continues to look pretty bullish. Let's take a look at copper. I haven't looked at it yet in a few days, but copper's still struggling, trying to figure out what to do. We have mentioned this 3 surges to a high. You make a high, sharp pullback. You make another small high, sharp pullback. You make another small high and a sharp pullback. That usually does damage, and it can roll over very easily from this point. If metals continue to rip higher, this will probably simply get dragged up with it, but I'm not a big fan of this chart pattern. I'm not a fan of the volume, a high volume on the sell side. So I'd be very aware if you're in the copper space. It doesn't look too exciting for me.